By listening to this Proof Stocks, you will be fully familiar with how to identify recession-proof stocks in stable industries and examples of companies that have historically performed well during economic downturns. Welcome to Got In Early, a podcast about investing in financial markets such as cryptocurrency, the forex, and the stock market. In the world of investing, it is essential to be prepared for all market conditions, including recessions. A recession is a significant economic downturn that can cause many investors to panic and sell their assets. However, there are certain stocks that tend to perform well even during these tough times. These stocks are known as recession-proof stocks. Recession-proof stocks are companies that offer products or services that people need regardless of economic conditions. These companies tend to have stable earnings, cash flow, and a strong balance sheet, which enables them to weather the storm of economic downturns. Investing in recession-proof stocks can help you diversify your portfolio and protect it from market volatility. In this episode, we will discuss some of the top recession-proof stocks that investors can consider for their portfolios. We will also provide tips on how to identify recession-proof stocks and why they are essential for long-term investing success. By the end of this article, you will have a better understanding of how to invest in recession-proof stocks and which companies to consider for your portfolio. Characteristics of recession-proof stocks. Recession-proof stocks share several key characteristics that enable them to withstand economic downturns. These characteristics include stable demand for their products or services, low sensitivity to economic cycles, strong balance sheets, positive cash flow and earnings, and a history of performing well during past recessions. One of the primary characteristics of recession-proof stocks is that they offer products or services that people need regardless of economic conditions. These companies are typically involved in essential industries such as healthcare, consumer staples, utilities, technology, and defense. Companies in these industries tend to have stable demand for their products or services, which allows them to maintain their revenue streams even during recessions. Another characteristic of recession-proof stocks is that they are less sensitive to economic cycles. These companies tend to have a lower correlation to economic growth or contraction than other stocks, which means they are less likely to be impacted by market volatility during recessions. For example, people still need to buy essential household and personal care products, regardless of economic conditions, making companies like Procter & Gamble an excellent example of a recession-proof stock. Recession-proof stocks also tend to have strong balance sheets, positive cash flow and earnings, and a history of performing well during past recessions. These companies typically have low debt levels, high liquidity, and consistent earnings, which enables them to weather the storm of economic downturns. Additionally, companies that have a history of performing well during past recessions are more likely to do so in the future. In conclusion, investors should look for stocks that possess the characteristics of recession-proof stocks when building a diversified portfolio. Companies with stable demand for their products or services, low sensitivity to economic cycles, strong balance sheets, positive cash flow and earnings, and a history of performing well during past recessions are excellent candidates for recession-proof stocks. By investing in these types of companies, investors can protect their portfolio from market volatility and achieve long-term investment success. Please note, all of the information and names included in this article are only for educational reasons. We do not persuade or suggest to invest or not invest in any asset or industry. Top recession-proof industries and sectors. Certain industries and sectors tend to hold up better during recessions than others. These industries and sectors offer products or services that people need regardless of economic conditions, making them an excellent choice for investors looking to invest in recession-proof stocks. One of the top recession-proof industries is healthcare. People need healthcare services, regardless of the economic conditions, making healthcare companies an attractive investment during recessions. Companies in the healthcare industry that offer essential services, such as pharmaceuticals, medical devices, and healthcare facilities, tend to have stable demand for their products or services. Another recession-proof industry is consumer staples. Companies in this industry provide essential household and personal care products, including food, beverages, toiletries, and cleaning products. These products are necessary for daily life, regardless of the economic conditions, making consumer staples companies an attractive investment during recessions. Procter & Gamble is an excellent example of a recession-proof company in this industry. Utilities are also considered recession-proof because people need electricity and water, regardless of the economic conditions. Companies like NextEra Energy provide essential services to customers, making them an attractive investment during recessions. Technology is another industry that can be considered recession-proof. Companies like Microsoft provide essential software, hardware, and cloud services that are necessary for many businesses and individuals around the world. As technology continues to advance, the demand for technology-related products and services is likely to increase, making technology companies an attractive investment during recessions. Lastly, the defense sector is also considered recession-proof. Companies like Lockheed Martin provide military and defense-related products and services, including fighter jets and missile defense systems. The demand for defense products and services tends to remain stable, regardless of the economic conditions, making the defense sector an attractive investment during recessions. In conclusion, investors looking to invest in recession-proof stocks should consider investing in industries and sectors that offer products or services that people need regardless of the economic conditions. Healthcare, consumer staples, utilities, technology, and defense are all excellent examples of recession-proof industries and sectors. By diversifying their portfolio across these industries and sectors, investors can protect their portfolio from market volatility and achieve long-term investment success. Examples of recession-proof stocks. Investors looking to invest in recession-proof stocks have several options available to them. Here are some examples of recession-proof stocks that have historically performed well during economic downturns. Johnson & Johnson. This healthcare company offers a diverse range of products, including pharmaceuticals, medical devices, and consumer health products. Johnson & Johnson's stable demand for essential products and services makes it an attractive investment during recessions. The company has a strong financial position, with a AAA credit rating and a long history of dividend payments, making it an appealing investment for income-seeking investors. Procter & Gamble. This consumer staples company provides essential household and personal care products, including Tide laundry detergent and Crest toothpaste. Procter & Gamble's stable demand for its products and strong balance sheet make it an excellent example of a recession-proof stock. The company has a long history of increasing dividends, making it an attractive investment for income-seeking investors. NextEra Energy. This utility company provides electricity and water services to customers across the United States. NextEra Energy's essential services and strong financial position make it an attractive investment during recessions. The company has a track record of dividend increases, making it a reliable source of income for investors. Microsoft. This technology giant provides software, hardware, and cloud services to businesses and individuals around the world. As technology continues to advance, the demand for Microsoft's products and services is likely to increase, making it an attractive investment during recessions. The company has a strong financial position and a long history of dividend increases, making it an appealing investment for income-seeking investors. Lockheed Martin. This defense company provides military and defense-related products and services, including fighter jets and missile defense systems. The demand for defense products and services tends to remain stable during recessions, making Lockheed Martin an attractive investment during economic downturns. The company has a strong financial position and a long history of dividend increases, making it an appealing investment for income-seeking investors. In conclusion, these examples of recession-proof stocks offer investors the opportunity to diversify their portfolios and potentially mitigate the effects of market volatility. By investing in stable, essential industries and sectors such as healthcare, consumer staples, utilities, technology, and defense, investors can position themselves for long-term investment success. How to identify recession-proof stock? While there is no foolproof method for identifying recession-proof stocks, there are certain characteristics that investors can look for when evaluating potential investments. Here are some tips on how to identify recession-proof stocks. Look for companies in stable, essential industries. Companies that provide goods or services that people need regardless of economic conditions tend to be more recession-proof. Examples of such industries include healthcare, consumer staples, utilities, technology, and defense. Check the company's financial health. A strong financial position can help companies weather economic downturns. Look for companies with low debt levels, strong cash flows, and a history of profitability. These companies are more likely to continue paying dividends and weathering economic downturns. Analyze the company's revenue streams. Companies that generate revenue from multiple sources tend to be more resilient during economic downturns. Look for companies with diversified revenue streams and a broad customer base. Examine the company's history. Companies that have weathered previous economic downturns tend to be better positioned to weather future recessions. Look for companies with a long history of stable performance and dividend payments. Evaluate the company's competitive position. Companies that have a competitive advantage, such as a strong brand or proprietary technology, tend to be more resilient during economic downturns. Look for companies with a sustainable competitive advantage that can help them maintain market share during economic downturns. By considering these factors, investors can identify companies that may be more likely to weather economic downturns and provide stable returns over the long term. While no investment is entirely recession-proof, investing in stable, essential industries and companies with strong financial positions and a track record of stable performance can help mitigate the effects of market volatility. Conclusion: while economic downturns are inevitable, investors can take steps to minimize their impact by investing in recession-proof stocks. Companies in stable, essential industries, with strong financial positions, diversified revenue streams, and sustainable competitive advantages, tend to be more resilient during economic downturns. Investors should conduct thorough research and analysis before investing in any stock, but especially during uncertain economic times. By identifying recession-proof stocks and investing in them, investors can potentially mitigate the negative effects of market volatility and position themselves for long-term growth. While no investment is entirely recession-proof, investing in recession-resistant industries and companies with strong fundamentals and a history of stable performance can help investors weather economic storms and achieve their investment goals. As always, investors should consult with a financial advisor and consider their individual risk tolerance and investment objectives before making any investment decisions. In the end, we hope that by listening to this podcast you will be fully immersed in what you are looking for. You can help us improve by sharing this podcast, which is published in a DOS investment magazine, and help optimize it by submitting your comments.